Hello, everybody. Welcome to today's edition of the 1 Million by 1 Million podcast. My guest today is Rajul Garg of Leo Capital from India. Rajul, welcome to the show.
Shimra, thank you for having me and very excited to be here.
Well, let's introduce you to our audience. Tell us about your investing focus. How big is the fund? What size investments do you make? Let's get to know you.
Sure. So as you mentioned, mine is an India-centric fund. So I'm looking at early-stage tech opportunities in India. It's an uptake from my angel investment activities in India over the last 5 years. This is a $30 million fund, 30. And we invest typically in the $500,000 to $1 million in an opportunity at a seed stage, sometimes pre-Series A, sometimes very early. I think the common denominator in the investments is more tech-oriented, but it's a sector-agnostic fund. So we can do pretty much anything as long as it has potential to be venture scale and enough tech leverage in it. So that's a little bit about us.
And can you define rather than the labels of seed, pre-seed, Series A, etc., can you actually tell me what your definition of validation level is where you feel comfortable? Like, are you looking for customers? Are you looking for paying customers, revenue, repeatability? What is your comfort zone?
Sure. So, sure, as you will know, I think it varies a lot across sectors and across opportunities. But let me give you a few examples. So there are companies that we would invest in sometimes which are purely at a concept level. Now it happens, but I know that one of our investments happened like that, which is purely at a concept level. It's in the lending space, and in general in India. In lending space, I think there is just a lot of demand these days, and you're looking for teams which have done it before and have a clear articulation of how they will segment it. It's a relatively simpler business in that sense, and you can enter at least we thought we could enter at a concept stage. In other cases, for example, if you're looking at consumer apps, social, gaming, or internet apps, generally we would look for some traction in terms of downloads and retention. So I think, for example, if you have, let's say, 50,000 downloads onto your app and good retention and good activity, I think we would sort of look at you seriously. But so it's kind of none of these are necessary or sufficient conditions, but I'm just giving you some ballpark in terms of what would catch our attention at least. Of course, if you're doing much more than that and sort of we believe in the concept, or you're doing revenue and other things, obviously all that is an added bonus. In enterprise space, for example, typically we would look for 1 or 2 beta relationships with customers. So you may not necessarily be making money, but we would look for validation that customers are willing to at least adopt your solution conceptually, that they want this solution, this product, and at least have a willingness to pay a certain amount of money for it. They may not have paid it to you today, but they have a willingness to pay this kind of money to you. So those are some examples of how
you want to be able to make reference calls to enterprise customers or B2B customers and get some level of comfort that they are willing to pay at some point when the product is ready.
I think establishment of a price point also is just a very important thing. For example, if you're selling to a large enterprise and you're selling really cheap, I mean, just to us, it speaks to us. It may not pay today, but if they value it really cheaply, then you're not strategic enough to them. And with long sales cycles, how do you build a large business on that? So I think if you sort of just also the level of engagement with those customers, yes, sure, but reference calls. But what we're trying to check is that, are you selling large to large kind of, right? I mean, large enough to a large company so that you can build a large business on that.
Yeah. Okay. And after the geography preference question with a specific, nuance in mind. For example, on the B2C side, then Indian investors are investing in mostly India-facing companies. Is that also your preference, or are you also doing global B2C? And then the counterpoint of that is, when it comes to, let's say, SaaS, software as a service, we see Indian investors mostly interested in doing global-facing companies, not so much the India-facing company. There may be validation level work in India, but the Indian VCs have decided that mostly when it comes to enterprise or B2B, they prefer the global-facing SaaS model. So how do you fit into this framework?
Pretty much guilty on both counts, I would say. I think, I think the domestic market in India is very large, and, you hear the macro factors like smartphone penetration and internet and, growing middle class and all that stuff, which makes it very attractive, at least conceptually, to a consumer play, and also very local. It's easy to sort of, not easy, but at least you can get into a local market and try out products at an early stage the way we are, versus it's very difficult sitting in Bangalore to do a play for Western Europe or for US in the consumer market. But I think global SaaS, as you mentioned again, I think Indian market tends to be tiny. And I think it's very hard. There are really no examples or very few examples of companies which have achieved any scale just in India. So I think most investors gravitate towards plays which are more global. I think there's another reason for it as well, that the Indian IT services industry is fairly mature over the last 30 years. And there are plenty of people, there who have sold to global companies, global enterprises, right? People from Infosys and Wipros and TCSs of the world. So it's not something which is alien to sort of us as Indian entrepreneurs to be able to sell to global enterprises. So I think it makes it a little bit easier also to find people, and, naturally people come up with those kind of ideas. Yeah.
Okay. So talk about what trends you see in your deal flow. Let's look at like the, year 2017. How many deals have you seen? What are the highlights in terms of trend lines in that deal flow?
So I think, look, last 1 or 2 years, almost every sort of presentation or every deck that I see of any substance tends to have obviously AI and machine learning and kind of all kinds of things on it. It may not necessarily have AI inside, but it definitely has AI on the label and all that. No, but I think, if you go back 3 years, right, let's say 14, 15 was in India, particularly was year of consumer investing going crazy completely, right? I mean, there was like a huge amount of investment that happened in India, particularly in consumer markets. I think 16, 17, I don't think there is a clear sectoral theme like that. And it's become a little bit more bottom up. But still, I think some of the things which everyone sees, and we see a lot as well, I think logistics as a sector, we see a lot of interest and a lot of players, large sector, $200 billion market in India, 13% of GDP, so we see a lot of players trying to do, and there have been a couple of big successes, Revigo and Blackbuck locally, but again, very fragmented market, very large. So I see a place. I think fintech, which, you could argue how much, you could argue that it's more fin than tech, but again, very large market because lending India is under lent to historically, and need for credit obviously is very large, both in consumers and in enterprises, and we see that as a very large sector. I mean, this is truly one where you could have also like 15, 20 very large companies built over the next 5-10 years, and not just 1 or 2. It's not even a winner take all market. In a lot of different ways, it's like a service market, and you just run an efficient ship, get into a region or sort of slice it vertically, horizontally, regionally, and build a business. So more execution driven. So lending definitely, I think, see a lot of stuff. Global SaaS, for sure. Again, as consumer sort of fell out of vogue a little bit, I think a lot more play on global SaaS last couple of years. So I think those would be top 3. I would say that we see. In terms of, if you ask me for 17 particularly, I mean, a large chunk of opportunities would be in those 3, but then there's a tail of all kinds of different things. I mean, among the investments that we've done one ed tech, we've done one health tech, one global SaaS, so I mean, there's also sort of all sorts of other bottom-up ideas that keep coming up, which are hard to classify, but I think those would be my top 3.
Yeah. And you are comfortable investing in all of those trend areas?
I mean, I don't know if you're totally comfortable, but yeah, we do invest in all those areas. I think this is a sector agnostic fund, so we are pretty much open to investing in all of those areas. But we take a very bottom-up approach and look at it deeply once it's presented to us. And yes, we would invest in all those areas.
Okay. Talk about your current portfolio. What have you invested in? What are the highlights? What would you like to discuss of the portfolio that's interesting? And as you're describing them, give us some insights into, when they came to you and what did you see that really, captured your imagination?
Sure. So we, as a fund, we only became a fund actually late last year and started investing. So we made 4 investments so far from the fund, and I can talk about a couple from that. So one of our investments is a company called Flixstock, flixstock.com. And what Flixstock does is that let's say you're a fashion commerce company in the US or Western Europe. And then it's been sort of proven that if you put up images which are modeled images versus just the product images, your sale conversion is higher. So, for example, if you're selling a shirt, you're better off putting a model wearing a shirt versus just the image of the shirt.
Okay.
However, the cost of getting a modeled image is fairly high because, you hire a studio, you hire a model,
Right.
You do video editing. So for smaller commerce players, it can be as much as $40, $50 an image. Versus, even for very large ones, it's $4 to $5 an image. So what this company does, Flixstock, is that it generates these images automatically, in this case, truly through AI. So what they do is that you can sort of, as a fashion commerce company, you can send them your product images, like images of your shirts and sort of linen or whatever it is. And they have their own model database, and they would automatically combine the two, and generate images for you and send them to you at a fraction of the cost. So I think that's sort of, it's a global SaaS play. I've known the company actually for the last couple of years, just at least the founder, and have always been intrigued. And when we came in, the company, so we committed to them actually in September, October last year as a fund and closed it end of the year. So they were already post-revenue. I mean, they were doing, I think, like almost $500,000 of ARR, annual recurring revenue, as a SaaS player. And they had good validations in terms of 2 or 3 customers. So they had a couple of customers in the US, they had 1 customer in Germany. And for example, this would be important to us. Now, this is a play which does not have a large enough market in India. And in this case, what attracted us was that, they've been able to sell to the US market, service at least 1 or 2 large customers, get this going. And that's what made it very attractive to us. So if this company, for example, had not done this much, or had signed up 1 or 2, let's say, smaller customers in India, it would be very hard to get in because the Indian market is small. And, the go-to-market risks are very high. I mean, how do you really know if a company will be able to sell to these markets unless sort of there's some validation? So this is one example that I can give you. Yeah.
Good. Okay. Let's talk a little bit about some of the trends that we are seeing in Silicon Valley, and I'd like to hear you reflect on the Indian counterpart of that trend. So first one is, how do you process the current investment climate where capital is moving further and further upstream? How does a seed investor mitigate the Series A gap? Are you seeing a Series A gap in India?
So I think a Series A gap in India is not new. It has always existed. So I think we're seeing this trend in the Silicon Valley newly emerge over the last couple of years, I would say. But in India,
more than that, it's growing. It's growing. Because we have a lot of seed capital that has come into the system in about 3 to 5 years. Right now, there are 600-700 seed funds, and there are, a much smaller number of Series A funds, and a lot of the venture funds have gone later stage. So that has accentuated and aggravated the Series A gap problem, but it has been there for a while now.
Sure. So no, I agree with you. But I think in India, the Series A gap or the deficiency has always existed. I think it's never been a market flush with funds. So I think except for if I just take an exception of 14, 15, where everybody went crazy, like I said, and I think there was just a lot of money falling off the attic. But I think before that and after that, capital in India has always been conservative, and there's never been plenty of it. That I've never seen a situation where there's a shootout for getting into an opportunity or sort of clamoring of sorts to getting into an opportunity the way I've seen in a few cases, at least in the Bay Area, and I've heard many of those cases happen. So I think the Indian entrepreneur generally is more sort of knows this going in, that capital is not going to be easy. Whether it's at C stage or Series A or even Series B, India has a handful of Series A investors in tech. I would say, I would say 10 funds who are doing, I would say 90% of the investments, maybe 4 funds doing 60-70% of the 50% of the investments, something like that. So I think it's always been a very concentrated market from a Series A tech perspective. And I think entrepreneurs have learned to live with that. But I think seed, of course, has grown in India. Again, these are all relative numbers. So while there were, let's say, 2 or 3 super active funds 3 years back on the seed level, now there are 6 or 7. So I think the numbers are still small if you add them all up. So I think, but still the supply-demand equation in India is still horribly skewed in the favor of investors. So, and entrepreneurs have learned historically to deal with that, and they're sort of, in fact, they see more people to go to today in that sense. So it's a little bit different from Bay Area.
Yeah. Have you seen any analysis or reporting on how many active entrepreneurs are there in the ecosystem in India right now?
So I do remember seeing that at some point of time. I'm not able to sort of recall the report, but I can tell you, like I was at a Let's Venture event recently, and sort of some of the reports that I see. I think if you look at 2017, then my guess is around 1,000 companies raised some sort of investment in India. So it could be angel, super angel, sort of investment, and give or take a few. So I think that's kind of the number, the new companies that got angel or super angel funded in 2017. And my guess is that only 1 out of 20 or 30 would get there. So my guess would be that it will be in the tens of thousands active, and of course some will die and some will keep, new will keep coming up. So my guess will be a number of that order.
Yeah, interesting. And by the way, as you know very well from my work, I'm a big proponent of bootstrapping, and we do see a lot of companies that are, especially Indian companies, that are doing very well in getting very far with the bootstrapping strategy and showing lots of validation before going out to raise funding, and funding becomes so much easier at that point.
I mean, honestly, funding and venture funding is very alien historically to Indians, right? I mean, it's a completely. I mean, I get requests where sort of the entrepreneurs can't even believe that people get funded that kind of money, and sort of, and why they are not getting funded while they have a much better business and this and that. So I mean, it's definitely a fraction of the market in that sense. If you take the wider, obviously, if you take small merchants and shopkeepers, then of course, that is a number which is in millions, right, of the entrepreneurs.
Yes,
right.
Yes, but even within the tech startup ecosystem, what part of it is because that we do follow that methodology of bootstrap first, raise money later, because our take is you have to survive to succeed, and if you leave your survival in the hands of investors, the probability of your survival goes down. So, since we are all kind of mathematically inclined people, we tend to want to maximize the probability of success. So that's where I think there is, especially in India, because of the cost structure and because of the general ability to be frugal in entrepreneurs, it's a good trend that there are a lot of companies that are bootstrapping to a significant level. And I have a company right now that is out for finance, has has already crossed $1 million in 2017 revenue, and this is now they're raising their first financing, and they're getting incredible traction in Silicon Valley. So
can you please introduce this company to me? But I think
yes,
in general you're right. I think in general you're right. Probably compared to the Bay Area. And there'll be some examples like Browser Stack, for example, is an example which is cited in India. Zoho historically, Browser Stack bootstrapped their way to 50 million and almost like $1 billion in value, purely organically. And Zoho obviously never raised any money. So there's certainly examples. I have to say, I don't know if it's a trend, and there's lots of them. I mean, you probably see many more of them because of your focus on that specific area. But I don't see that many. I mean, I still see I see a few, but not as much as you would think. The truth is, when I took Freshdesk out for their first round of financing back in 2011, when Girish came to me, they had product already, but I kind of made them spend, I think, 4 or 5 months to go through the validation process and get to paying customer before going and raising that first round of funding. And the first round was already a $1 million Series A from Accel. So that, it was immensely valuable to have a set of paying customers and an understanding of how to acquire those paying customers to get that funding. See, I think in the enterprise space, I think you're absolutely right. I think in enterprise space, it's hard to imagine a VC coming into a company with nothing, right? With no paying customers, no validation at all. I think, or at least I think in the consumer market,
it ain't going to happen these days. I just tell people flat out that there is absolutely no chance unless you have some personal relationship with somebody who knows you and is willing to write a check for you. There is no chance anybody is going to write a check on just a concept.
I agree. I think in the B2B stage, I 100% agree with you. I think the consumer markets, because revenue is usually comes in much later, and it's hard to bootstrap your way in a consumer market. So I think that might be sort of a distinction there.
Yeah, consumer market, people still want to see traction. People want to see growth. People want to see lots of users, and getting to lots of users with no funding is not an easy thing to do either.
Correct, but I think getting revenue or real revenues is still harder. So I think
very hard. Oh my God! I one statistic that I recently encountered, which really blew me away. Which I've been covering Facebook for 10 years at least, and I've never seen a number on how much Facebook makes in India until just a few months ago. And
it's shocking. I know the number, and it's shockingly low.
Oh my God! It's $50 million, and with all of India glued to Facebook and WhatsApp, and they make $50 million in revenue. It's really, painfully shocking.
Let me make you feel a little bit better, not a whole lot better. So what Facebook does and Google do in India is that a lot of their billing actually gets directly sort of paid into Ireland, for tax reasons and all that. So actually not all of it gets counted in that $50 million number. The true number is more like 200 million, I would say. So it's not 50, but it's not $1 billion. Still 200 million, you could argue, is still small. But I think most people estimate.
Actual validation on that?
I do. I don't think this number gets published, right? But I know, it's in that range. I'm pretty certain. I'll have to dig out. I don't, because you can't count the revenue which you pay through credit card into the Irish Facebook Ireland, right? But most people do that. Historically, that's the only way they were doing business. I think now they've started doing other things. So I think that's the anomaly.
But still, like 250 million users translating into $200 million in revenue for a company that has the maximum personalization capability, targeting capability, I'm talking about ad revenues, is very discouraging for other people who are trying to do ad revenue-based businesses, which has become really, really difficult to scale.
I mean, it's just like, you could just do the math from there on. So content businesses pretty much, but they are getting funded, right? I mean, you see new companies like Clip, which is a video, the next billion theme or the next billion theme. And then there is ShareChat in India, which have gotten funded, I think, just because they're probably seeing a lot of user traction. But I think revenue is far, far away of any significance, obviously.
I think those are going to be very difficult to scale. And what do you make of unicorn mania? I was hoping that Silicon Valley is going crazy. India tends to be more conservative, but then India went crazy too. So how do you parse unicorn mania?
We all plug in into the same mothership, so there's like not much that you can do to deviate from that much. I think people have moderated, let me rephrase that. I think smaller funds like mine, right? Like let's say Bloom, my fund Leo, or sort of other seed funds in India. My guess is that I think we define a unicorn in our own head as a company which can reach like 1,000 crore, about 150 million to $200 million in value. And I think, but we really need that kind of scale at least for it to move the needle for our fund. And it's very, very hard to enter an opportunity knowing that it will be a nice $20 million profitable business. Either I think maybe we need funds like that who are more PE in their sort of DNA and are looking for 25% IRR, and no mortality in their portfolio. But I think early stage venture type funds, unfortunately, it's not the asset class that can cater to small and beautiful business. I do think that's a real gap, and sort of as an angel, I have made investments in those businesses and I've done very well for myself. But as a fund, I just don't see how a fund can invest in those kind of businesses. So that is, I think, a gap which somehow the ecosystem has to fill. But venture is just not set up right to cater to that, unfortunately.
So there are small funds actually, very small funds, micro VCs and accelerator type of funds that are actually focusing on these small niche businesses that are designed for acquisitions, essentially. And part of what's going on, you may have read my recent article, SaaS companies have an unprecedented opportunity, where I articulate, like, there are a lot of SaaS companies that have reached critical mass, 50, 100 million, 200 million, some 500, 600 million. And these companies are looking to acquire, and they are very happy to acquire these small niches to fill the gaps in their product portfolio. And this is, unusually large number of acquirers available, especially in SaaS right now, for these kinds of niche opportunities. And I think, instead of bloating them up with huge amounts of funding, if they can be done as a capital efficient small business with a small number of customers where the product market fit is identified, and then you sell to one of these larger SaaS players to access the channel. You don't invest in building the channel. I think this is an excellent investment opportunity.
I agree with you. I think in India particularly we need more validation in terms of these acquisitions picking up velocity.
Yes.
I do think if we start seeing Absolutely. That, then I think everybody will get excited and you will see a lot more investments. So I think 2017 was, by the way, I think by far the best year in terms of exits. I think we had a bunch of IPOs and we had a bunch of exits, acquisitions and all that. But still, in absolute terms, it's relatively small. We still need, I think maybe we need to create these linkages with the Bay Area and other markets to be able to just increase more deal flow and deal volume in SaaS. And I think if we did that, I agree with you 100%.
My recommendation to you and to all the investors who are on the ground in India, especially the smaller investors, smaller funds or angel investors, is look for the connections into the SaaS ecosystem of companies that have critical mass, and invest in companies that can be acquired by those in small acquisitions, and create a lot of these deals. I think a lot of transactions happening in India right now will do enormously, add enormously to the growth and health of the ecosystem.
I think that makes a lot of sense. And perhaps the way to do it is to sort of just maybe engage with people in the Bay Area, and sort of maybe these are bankers and other sort of people who are in the know. Otherwise, it's hard. Like for a fund like mine, it's a small fund, and how do you do that? So I think we need some sort of interface. Maybe larger companies like Lightspeed can do it because they have a presence here and their presence in India and their presence in the Bay Area. But you're right. I do agree with you conceptually. I think it's something that should be done. But I would like to figure out how we can do it. But I agree with you.
I'm working on that as well. So we can offline figure out how to collaborate on some of that. So we'll figure it out.
Please do.
So Any other parting thoughts? This is a great conversation. I think it's helpful for the entrepreneurs to. I always point entrepreneurs to, listen to and understand the investors' thought process before going and talking to somebody. So we try to, introduce them to the investors through these forums. Is there anything else that you want to convey to the community?
I think the only other thing I'd like to say is that I think India is really buzzing. There is a lot of entrepreneurial activity. I get probably like 4 or 5 investment approaches every day, just organically through my LinkedIn and email and website and this and that. So there's a lot of activity, I think, and I think it is finally, slowly but surely, the wheel is turning, and I think the scale is approaching. And I've been in India the last 20 years, and I've never been more excited about the Indian entrepreneurial activity, more than I'm right now. So it's a great time to be in India, and I think I would certainly encourage entrepreneurs to sort of keep the faith and keep going. It's a great time, I feel, and it should only get better next 5 or 10 years.
Yeah, and our roundtables are full of Indian entrepreneurs on a weekly basis. Every week we see tons and tons and tons of Indian entrepreneurs. So great. Well, very nice speaking with you, Rajul, and audience. Very nice to have you today. Please stay tuned and come back for more of these podcasts, and also stop by at the mentoring sessions, the weekly mentoring sessions with your projects, and we'll work together. These are working sessions, as you know. Come to the Free Public Roundtables, present your problems, and we'll try to do what we can to remove your roadblocks. Speak soon, and come again.
Thank you very much.